Mr. Celestine Rwabukumba, Chief Executive Officer of the Rwanda Stock Exchange and the President of the African Securities Exchanges Association, Dr. Leila Foley, Group Chief Executive Officer of the Johannesburg Stock Exchange, Ms. Astrid Rodin, Deputy Commissioner of the Financial Sector Conduct Authority of South Africa, distinguished delegates, ladies and gentlemen. It gives me great pleasure to address the 12th Annual Building Africa Financial Markets Seminar on the critical theme of navigating new horizons, evolving African financial markets. Let me start by commending the organizers for this timely event, for which the Economic Commission for Africa is delighted to be a partner. I also wish to thank the Bill and Melinda Gates Foundation for the successful collaboration. Distinguished delegates, African countries are confronted with a complex global financial landscape characterized by limited access to finance and shrinking fiscal space. Access to external finance is impacted by falling and unpredictable official development assistance, coupled with insignificant foreign direct investment at less than 4% of the global FDI flows in 2022. Low tax to GDP revenue base of 15.8% and $163 billion expenditure on debt repayments this year is further exacerbating the economic stance of countries. Furthermore, declining long-term concessional finance, high premium on sovereign bonds, and unfair risk perceptions are reducing the market access for governments and the private sector. All these are occurring when Africa is in urgent need of resources to achieve the SDGs and Agenda 2063 targets. That's why the reform of the global financial architecture must be everyone's business, because it must address the needs of the vulnerable majority, not just the wealthy minority. Distinguished delegates, ladies and gentlemen, Africa's most pressing need today is how to finance its development. And in a world of economic uncertainties, the strengthening of our financial infrastructure makes economic and business sense. African capital markets are emerging as a compelling narrative of growth, resilience, and opportunity. They are not just financial platforms. They are the engines that should power our economies. And they are needed now more than ever because governments alone cannot grow their economies in the current challenging world. We need private sector, and well-functioning capital markets remain the best way to mobilize long-term resources to support private sector participation. Therefore, today's stock exchange markets must contribute solutions to Africa's development challenges. Put simply, they must transform from playing on the margins of the global finance to become the vehicles for long-term investments, driving economic growth and stability. Innovative financing mechanisms, such as the green and blue bonds and sustainability-linked bonds, offer a good starting point. We already know that climate bond issuances in Africa have increased by 500% over the last decade to over $4 billion. These bonds should be developed and traded on our stock exchange platforms. In addition, the full potential of Africa's carbon market remains untapped, with countries trading at less than $10 per ton. Yet, trading on the stock exchange has the potential to yield up to $100 per ton, generating more than $50 billion annually and over 100 million jobs. We must support countries to trade carbon on the capital markets to get the actual value. Furthermore, capital markets offer countries the opportunities to benefit from institutional investments such as the pension fund and insurance. Pension funds can become significant contributors to the domestic savings, channeling long-term investments into our capital markets. In addition, we need to expand our commodities exchange markets. They remain crucial for growth, promote regional value chain development, and enhance risk coping mechanisms. Let me end by saying that capital market development is the way to enhance investor confidence. Investors want inclusivity, product diversity, transparency, and efficiency. They want to see regulatory frameworks that protect investors and instill confidence. Product diversification, trading platforms, and settlement systems that promote trade are sine qua non for success. These should not be insurmountable if we work together. Therefore, the outcomes of this seminar should lay the groundwork for an African capital market system that not only supports the aspirations of today's investors, but also paves the way for future generations to thrive. The UN Economic Commission for Africa is ready to accompany you in capital market development on our continent. I thank you very much for your kind attention.